Welcome to The Real Money Show, the number 18778 Silver, the website, guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correia. And it's already been an amazing week for precious metals. It is the golden era, they say, Jerry. And
golden age.
Golden age, and we're going to talk about that. But let's first talk about a text message you received from a client. Let's start there.
It's so interesting. Yeah, it's definitely on time. Yeah, Linda, she just texted me earlier today at about 10 a.m. And she wrote, "Hey, Jerry, it's been a while. I hope you and your family are doing well. I'm reading about the London bullion market and with Basel III compliance and Trump's golden age of America. This all reminds me of those conversations we had way back then." She goes, "We are in the zone now." I couldn't agree more, Linda. You're absolutely right. We are in the zone and golden age is upon us.
So, look, we are single digits away from breaking 2,800 on gold. Just like that, silver is trading well above $31 an ounce. Remember, leading into the new year, we were around $28, and bang, we're right back into the zone at 31, to steal the phrase from Linda there. And the big news this week and over the last several weeks, but the info's been starting to really stream out, is that because of the tariff threats in the United States, physical metal has been being drained out of the London bullion exchanges and coming into the U.S. in record numbers, and that's for both gold and silver. And we've been monitoring that for the last several weeks as it's been happening. We've mentioned on the show that it's caused a rise in the premiums to take delivery, that it used to be, 5 cents an ounce on silver. It went up to as much as 75 cents. So there's a cost to take that delivery and pull it over to the United States. Now remember, the COMEX, we reported for years how empty it was. Right? It got emptied out during COVID, and it's been continued to be emptied out. In other words, while you can't go to the miners to get the physical metal, you can go to the exchange, which is not meant for that, but that's what's been happening. So the big thing now is that the LBMA is so out of product that there are major delivery delays, and we find out, at least on the gold side, that central banks are filling the void for the lack of physical product. Did I get that right, and what's your take?
Yeah, there are some in the gold and silver community that are sort of saying that the tariff threat could be the reason why. It may not be the reason why. We have
it could be narrative cover.
Basel III compliance that is putting pressure on the deliveries, but we just have to remain focused that this all revolves around the physical, and this all revolves around rehypothecation and the overusage of your contracts to try to just temper the price or manipulate the price or make money on the price of silver and gold fluctuations.
So just for new listeners, what you're talking about there is that for every 1 physical ounce of silver, for example, there's hundreds of promises of paper for those on these exchanges.
Yes. And over again, like we're reading now that because of potential threats that the deadline is this weekend, so we're all paying attention, that there are also tariffs on other metals, copper, aluminum, steel, as well as computer chips, pharmaceuticals. So these are all things that we have to be cognizant of. So, but with the shipment coming from London over to New York, some are speculating, hey, some things may not even be moving at all, that these can just be easy accounting tricks that, there's a one over here, let's put that one over to New York, and then vice versa, because as it's definitely led to an inventory depletion. Look, this is what's happening. You have tons of gold exiting the vaults of the LBMA to get imported into New York.
Well, okay, let's just break that down for a second. You're saying there is a theory that says maybe physically it's not moving, but accounting-wise they have to account moving from, from one vault to the other. But we've known for years the exchange for physical, that they didn't have it on the COMEX, and they've been telling people, if you want it, you have to go to the exchange for physical over at the LBMA.
Yeah.
So I'm not really buying this is only on paper business.
Yeah, it could be. We know that this is definitely spearheading a major look inside of the vaults, both COMEX and the LBMA. As Gally spoke from TD Securities to us on BNN the other day, making this issue totally mainstream, that this is what the banks have to do. They have to fulfill these short positions, their bets that the gold and silver prices will drop, and then traders are now required to pay a tariff on metal entering the U.S. in order for traders to hedge against this risk. These shorts have been covered by moving metals from LBMA to COMEX, but guess what? The LBMA London is also holding short positions as well. So what is it next week? The COMEX is going to ship it back to London. They're just juggling metal from one side over to the other side. The fact of the matter remains, there's too much paper out there, and this will be revealed, I think, very, very quickly. And when the prices do get revealed, when this shenanigans gets revealed, this will ultimately lead to a new price discovery that happens in the market. Because Bank of England, as we're seeing right now, is on the ropes. This is coming from Maneko64 out of England. He's a contrarian investor. He follows the gold and silver moves. He writes that the Bank of England is on the ropes as it has a de facto halted delivery of gold, or has defaulted. They are supposed to have about 5,000 metric tons, but are making buyers wait 4 to 8 weeks for delivery instead of a few days.
So High Heat on Twitter X said, the London gold market now seeing technical default on cash spot market. Gold delivery next up is silver. This comes from Make Great Gold Again on X. Big breaking. Gold and silver London bullion shortage finally hitting the mainstream and spreading like wildfire. This is a unique situation, and we've seen points of stress in the market before, which has led to higher prices. And since we're seeing over $1 move up in silver just today, Friday, as we record the show, is it safe to assume that this is part and parcel of that, or is it something else as well?
There's other things that the tariffs can impact. We're talking about copper now. Now this is from an article that I read overnight from Ainsley Bullion out of Australia. Great reports, always from them. And what's interesting now that they're potentially impacting copper, and copper prices are starting to back off, which is usually, Dr. Copper is a barometer of economic health going forward. If there's going to be expansion, copper goes up. Now we're seeing a potential slowdown. So therefore, they're not mining as much. They're cutting their production. But gold and silver are a byproduct of copper. So if you're cutting your production of copper, and I need my gold, or I need my silver to go into every industry possible nowadays, this is a further supply squeeze and a short squeeze that's going to propel the gold and silver higher, regardless of these tariffs potentially impacting gold and silver. Just because it's going to impact copper, it will positively impact gold and silver as well on the top side. So there's so many moving parts, and when the pistons are all fired up, like I usually say, this is like a V12 engine, all moving in the right direction for a super cycle higher in precious metals.
Yeah, and I think we also have to consider, we'll talk a little bit more about tariffs, interest rates, what that could mean, and the golden era that we're in, the golden age that we're in, and see what we can pull out from there. Because I think there's a lot of really interesting things going on that no one's talking about, by the way, that we're going to talk about right here on the show coming up next. The number, 18778-SILVER, the website, guildhallwealth.com. If you want to hold physical gold and silver in a registered account with Guildhall, we'll help you do that physically. We'll help allocate it so that you own it, that there's no counterparty risk, that you can even go to the vault and personally audit your holdings. And if you're going to own gold, you better own it. versus investing in it and using counterparties. It could be a cheaper way to go, absolutely, but there's no ownership. And if you're going to have the insurance, you want to make sure that you have the actual physical product, that you can go and hold it in your hand. The number 1-877-8-SILVER, the website guildhallwealth.com. The RSP season is just around the corner, so remember, this is a great time to defer income, get a break on the taxes. We all need some breaks on taxes right now. Putting some money into your RSP is a great way to do that. And of course, hold physical gold and silver, because at the end of the day, Jerry, holding physical gold over the last 20 years would have netted you over 500%. And I was just looking at the numbers and comparing purchasing actual physical and paying for physical storage, right? Versus managed mutual funds.
Yep.
And there is no doubt that over the last 20 years, gold has outperformed that and made you more money. There's no reason to pay money to managers that you don't speak to and just pay out these fees when at the end of the day, gold and silver have done the performance and the cost to store it is much less than those types of management fees. So if you want to take control of your portfolio, consider holding actual physical gold and silver in your portfolio. You're chomping at the bit to jump on that one, Jerry.
I was actually just crunching those numbers as well versus a term deposit over the last 20 years in Canada. If you had your money invested in a term deposit, according to Trading Economics, you netted about 5.63% per year, whereas gold has returned over that 20-year period an average return of 10.5% over this time, clearly beating inflation, which is the silent. Actually, it's not silent anymore, Jeremy.
Everyone knows about it.
It's definitely overt. It's the boogeyman's out in the open, and we have to battle that boogeyman. That inflation is here. It's a stealth tax against you, against your savings, against your purchasing power, and you can't beat it today, unfortunately, with a term deposit.
I want to get into inflation and interest rates. We'll get into that a little bit, but first, let's speculate a little bit. Let's just talk about what we're seeing right now and apply it to the gold and silver market. There's a lot happening. So this is the type of stuff that you and I do every day, but we don't necessarily always do it on the show.
That's true.
I don't know why, but let's do it now. So what we have right now in the U.S. is a law and order president. You can see that with the deportations that are happening. They most likely are going to confirm RFK, who battled against a senator about taking away their ability of the pharmaceutical companies to be sued.
Right. That was action-packed yesterday. And Kash Patel.
Kash Patel's today. Mm-hmm. That's going to be another wild one. But here's the thing. If Trump is truly a law and order president, then how would that apply to the fact that banks have gotten away with all of the paper leverage and the regulators not regulating it?
Yeah.
That's how they've been able to get away with it for so long, and that's how come the price hasn't exploded higher, because you've had this ability to warp the price discovery mechanism.
Right.
Now, they're not doing a great job. They held the price in the teens, then they held the price in the 20s. They're holding the price a little bit in the 30s. At some point, the lid comes off and this thing skyrockets. But don't you think that a law and order president, because we know that under the last presidency, he went after JP Morgan and you had convictions.
True.
What do you think is going to happen this time if indeed he's really going after them? Does it make its way to the financial system? Does it make its way to the leverage that's in the short positions right now?
You know what? I think that's huge, Jeremy, to unpack. And I think his speech last week talking about President Trump, he suggested replacing income tax. So the bill has been tabled already. I think it's H.R. 25. And he referred to a time where the U.S. had immense prosperity. There was no income tax. Yes, there were tariffs, by the way, lots of them. And it brought equilibrium, some truth. And I think that's what's missing. With law and order, What we've seen is a masking of the truth. We've seen redefinitions of what a recession is. It's no longer three down periods of GDP decline. They took that away. What else did they redefine? They redefined the gauges that we need to track inflation, which I'm going to talk about. But if we go back to an era where, okay, income tax repeal is on the table now. It's a bill. Okay, we're leading towards the truth here. Further, there was also a Gold Standard Restoration Act at the same time. And the mere fact that he cited this period between 1870 and 1913 where there was prosperity, we had growth, we had industrialization, and things are great. You had more transparency. And I think as we progress, law and order coupled with truth and maybe some truth-telling media. I think the media is still doing a great job of hiding things and obfuscating the truth.
Well, that period of time, you also had the destruction of the bimetallic standard, right? You had William Bryan Jennings' famous speech, Cross of Gold, where they took silver out of the standard. So it was just a gold standard at that time. But it does seem like there's a lot of peeling back the layers right now in this administration, peeling back everything, peeling back all of these sort of regulatory things and cultural things. It's all a peeling back and a rolling back, and it's not now. But let's go from the past to the future, because one of the things. So let's just quickly finish off. I do think that there's going to be a reckoning for the financial system with regards to the futures market and with regard to the regulators. I think if you look at Gary Gensler leaving the SEC, right, scurrying back to MIT, hopefully he can, do his thing on the young minds of Americans,
go back to
right?
Education, right?
Maybe he's hoping to have an effect there. But at the end of the day, I think that if it is a law and order president, you're going to see regulators. Who was the regulator back in the day, who had it all? The guy with blonde hair. Do you remember him?
The famous guy with the blonde hair. No, I don't remember. I don't remember him. Sorry, it's not clicking right now. Should we pause?
Yeah, let's pause. Just figure out who it was. What was his name? Bart Chilton. I got it.
There you go. He got killed, right?
You can cut to me.
Killed?
I'll just add his name, right?
Did they kill him?
No, he just died.
He just died.
Yeah.
Okay.
I'll just say his name and move forward. Bart Chilton, he would have loved what's going on now because his hands were so tied, right? I think that there will be movement in the regulators, which is going to kind of bring the hammer down on the banking system. I think everyone's got to play fair. And I do think that that's eventually going to have a big effect on the metals. I also think, by the way, just my belief that there will be a revaluing in gold, that there's a reason these central banks are buying it, and that it's not going to be an overnight revaluation. They want to give, or at least whether they want to give it or they're taking advantage of it, the idea that you can continue to accumulate as the price is rising because you're getting all the benefits of that revaluation. But let's go from the past to the future, Jerry, because during the break we were mentioning Judy Shelton. Now, you're not necessarily going to lay your hat on holding gold and silver purely just because she has a new book out. But she's had some ideas that have already seen fruition in the current administration. So let's see what else she's talked about. Yeah.
But we've been following Judy for quite some time. Back in Trump's previous administration, she was his economic advisor, who did come up with a book as good as gold. And in the past, she advised and she emphasized that the U.S. should not create a central bank digital currency. She made a case that we should abolish this idea. We should get rid of this idea.
Didn't they do an executive order on that already?
And there was an executive order just recently. It is now banned. Okay? So we move forward because, yes, we understand the dangers of the SWIFT system. We saw how the US dollar and the SWIFT system were weaponized against certain enemies for not being compliant or friendly economically or on the geopolitical front with Russia and Ukraine. So let's sanction Russia now. Even a neutral country like Switzerland, sanction. You don't. I thought you were neutral. Okay, and then people pulled their gold away from a non-neutral country. But anyways, I digress. Like, we are at the point where we are embracing a different digital system, one that's on the blockchain.
So let me just lay this out for you on the platter and tee you up here. In the break, we were saying, what we're seeing right now is a lot of product coming out of retail being refined, not to new. What happens is if there's a lot of sell orders, right? Retail is pulling in physical product, but typically nobody wants 2015 Silver Eagles.
Not
right?
If you have 2025s.
And if the coin shop isn't selling as much as they're buying from the public, they send it back to a wholesaler who will then melt it, because it doesn't cost a lot of money to melt it and turn it into new product. Well, it turns out that while there's delivery delays in London that are crazy, and there's basically a default, in the States, there's a lineup to have product refined. There's delays of backup on refining physical product, I think for 6 weeks or something like that. And this product isn't being refined into 2025 Silver Eagles. It's being refined into 1,000-ounce bars, right? You can give the numbers in a moment there, Jerry. But so I mentioned to you during the break, why 1,000-ounce bars? And your response to that, as I tee it up for you here, is the future.
And I believe, since this is metal that is being refined into 1,000-ounce bars, they're going into, it's a massive move into the U.S. Mint, which is the entity that is supplying this money to the U.S. Treasury. And back to Judy Shelton. Judy Shelton right now is advocating for a gold-backed treasury bond, specifically a 50-year Treasury bond. And it was her opinion that last week, I believe it was the Time or some other New York Post, I believe, she wrote, "Here's the first step toward President Trump's golden age for America." She wrote, "Could a 50-year bond redeemable in gold on America's 300th birthday point the way out of the era of physical or of fiat money? Can it end the fiat money disaster?" So now she is developing, she is advocating a gold-backed treasury bond and the further development of stable coins. So I believe that with a blockchain technology coupled with U.S. Treasury, so we're not talking about central bank, we're talking about the sovereign wealth of a nation. The sovereign republic of the United States is stepping up for the golden age, and they're using blockchain technology. There's nothing wrong with blockchain technology. What's wrong is the SWIFT system that is very old, it's archaic and slow. It's time for the future, and the future is revolving around gold and silver. This is not just gold. I think it's bimetallic, because we're seeing the U.S. Mint is taking $2.2 million worth of silver from Asahi, 60 million gold from FC Stone, $16 million worth of silver from StoneX, 17 million from A-Mark, you name it. They need that silver. I wonder for what reason. What reason? We can speculate further. We can connect some dots, and that's all we're trying to do. We're following the trends.
Let's connect some more dots in the next segment. The number 18778-SILVER, the website guildhallwealth.com. Could it truly be the golden age for America and the world if they're potentially getting rid of a central bank and potentially going back to a gold standard that has blockchain involved in it and tokenization? It could very well be. And what does that mean for the prices of gold and silver moving forward? The number 18778-SILVER, the website guildhallwealth.com. Please visit our e-store guildhallpreciousmetals.com, and you can get some physical gold and silver in your hand. It's a great way to start. But you were talking about something that lasts a lifetime, is virtually indestructible. I suppose if you put 500 ounces into a ballistic missile, okay, that's
gone.
It's gone. But if you're putting it into a battery for an electric vehicle, that can eventually be recycled. At what price? Well, that's for the market to dictate. And as it gets harder and harder to get, it's going to get more and more expensive to get. And if there's issues with copper, as we talked about at the top of the show, then you're going to see prices continue to rise. And the pressure and cracks in the system between the COMEX and the LBMA of what's happening, we today on the show have outlined that on one level, there's a narrative of tariffs. On another level, it could be pressure of a changing system that says, ooh, regulations may be coming. Maybe it's a crackdown is coming, and you better be prepared for it. However, what we're seeing in terms of what could definitely be happening is, what is it, 589, Jerry?
Oh, yes. So as we were talking about default, now they haven't really declared, 4 to 8 weeks to deliver out of the Bank of England and the LME, London bullion markets. That, in essence, what that is, technically, is a default.
Yeah, usually it should only take a couple days.
Yeah, 5 days. But in summary, a failure to deliver by the COMEX or the LBMA would have obvious widespread repercussions in the paper markets, disrupting the silver market, price spikes, and eroding trust. I mean, trust is already gone in financial institutions. So where does this lead? The derivatives market will probably go belly up. We'll have the extras pyramid in full action mode, that, risky money traveling in and wiping out above ground reserves of gold and silver. But Rule 589. So when you start implementing provision changes and you start changing your prospectus in the GLD, for example, and you start implementing emergency measures, emergency protocols like Rule 589 for the COMEX, we start paying attention. You're indicating to us that something's wrong.
Have they done that yet?
So they've added this caveat called Rule 589 to mitigate disruptions and maintain order in this market. Order, whatever that means, an orderly exit out of the COMEX. And what happens is this provision causes almost like an auction to take place, where they need the silver back in the market or they need gold back into the coffers of the exchanges. But this has an amazing topside effect on the silver holders. Physical delivery is happening, and those expecting physical might receive cash. That's one of the protocols. So instead of you taking the physical, here's the cash. But if the silver's price skyrockets due to the shortage, the cash settlement amount may not reflect the full value of the anticipated topside in the market.
Is that sort of like what happened in nickel? They just said, okay, yeah, it imploded, but we're not going to pay you out at those prices that it got to.
Yes, this is all happening at the same time, though. Market sentiment starts to erode with the COMEX and the LBMA, so trust for these institutions. And mind you, this is where we get our prices for gold and silver. Investors are ultimately moving away from COMEX unallocated paper positions. In the last segment, you talked about, well, how can we right the wrongs of all these paper futures contracts? This is the way to do it. You do it organically, and you do it through just taking delivery. And this is what's happening. Obviously, there's going to be huge demand, but this is a mechanism, I believe, that's going to likely be triggered very soon. This is another one of those pistons that are moving in favor of precious metals, and this can definitely, due to extreme physical scarcity, especially in the silver market, we're talking about 5 years of deficits coming out of the ground, a lot less above ground ounces than gold. It's a small market, and you start eliminating this very important element out of the industries that require it. This is going to have some tremendous fireworks ahead. I see triple-digit silver very easily because of the situation. And then further, you have interest rate cuts. So so many scenarios, Jeremy, at the same time.
So do you think that they can actually call that 589, or do you think that they're going to do everything they can to avoid it? I mean, the fact is
that's their means to do it.
If they're not delivering in 3 days and they're taking weeks and weeks to deliver already, that's well past the tariff time, right? So it just seems like the story isn't yet out there. Is it 589 that puts the story on the front page of the news? What triggers it? What will trigger it as well for mainstream, Main Street to say, oh, this is now, I really should own this.
Yeah, I'm not sure if they will actually say, oh, Rule 589, let's go, let's invoke 589. I think the actions, the actions of Rule 589, if they start implementing cash instead of the physical delivery, that is a Rule 589. So I think they're already trying to slow the pace at which this is going to lead out into the general public and to the media.
So if we start to see the symptoms or the methodologies of Rule 589 implemented, like cash outs and things like this, we could basically assume that it's already been implemented.
And one of those is restricting new contracts. So if we also see limiting of the gold and silver contracts, we're already seeing price premiums and margin requirement increases. If you want to hold a paper position, well, guess what? You have to have deep pockets.
You could limit paper by discouraging
paper. The exchange might halt the issuance of new futures contracts until the situation stabilizes.
Or discourage until they can kind of get it under control.
Yeah, but the control is there. The situation is stabilized because we have exchanges already that are moving at the same time with the COMEX and the LBMA. There is the Shanghai Gold Exchange, and there is the Indian Bullion Exchange. Two entities that actually have the physical. So it's definitely so exciting to watch, and I want to see how this transitions. But you're going to transition easily and safely and with stability in the physical precious metal space. This is a time to actually hold it. Again, if you do not hold it, if you can't hold it, you do not own it.
Triple-digit silver.
I said it.
Yeah, you said it. It's very exciting and definitely a possibility, especially with the devaluing of the dollar. So let's talk about that in the next segment. Dollar devaluations, interest rates, what it means to your pocketbook, what it means to hold gold and silver as a rebate against the devaluing currency. The number 18778 silver, the website guildhallwealth.com. I think, Jerry, by the way, gold easily, if you were just to add conservative numbers like 10-15% a year, that pushes gold well above $5,000 in the next 5 years. I think there's slippage on that. I think 7,000 is in the cards, assuming the currency doesn't completely change, right? Maybe we go to an Amaro.
Remember that?
Remember the Amaro?
Yes.
So I think a lot of things can happen. I think good things are going to continue to happen in the metals. We've seen it. So let's talk about this debate between Trump and Jerome Powell. They said, Trump has obviously stated he wants a lower dollar, and of course he does. They need to pay off the debts, and they need to make manufacturing available in the States, and they need to make exporting look good. I think to offset that does mean that you're throwing in the towel on inflation in some respect. In my opinion, I think the caveat to that is if gas prices are lower, right? If taxes are lower, there's offsets. We can handle 5% inflation if it's cheaper to buy gas.
If you get rid of my income tax.
If you get rid of that's a huge move. I don't know if it's going to be a sweeping. It feels like it's like one little layer at a time. But speaking of that, Jerry, let's just speculate for just a moment here. If they got rid of income tax in the States, how can you possibly in Canada not do the same? You're already competing with a 20% capital gains tax for corporations or taxes for corporations. It's like 50% in Canada. You're not going to have businesses in Canada if you don't compete with the States.
Do they want to have business in Canada? It doesn't look like it.
Well, not with the current ideologies, but you, again, if you want to compete, you're going to have to match. And if they're going to get rid of income tax in any sort of way, in any sort of pullback on it, let alone getting rid of it, that's got to happen here too.
Yeah.
And I look back, and I've said on the show, 1970, we were, I think, the second most wealthy nation in the world. And this was before they lifted the gold standard. And look at everything that's happened as a result. All of this peeling back is a good thing. So what do you think? What did you make of this debate? They asked Trump, will Powell lower the rates? And he said, yeah. But Powell, as Vince Lancey quite right called it, didn't. You know, he decided to be macho and decided not to.
Yeah.
But is that the end of the story?
No, I think this is going to be a back and forth. It's kind of like watching wrestling, Jeremy. Good old WWF going back and forth now. Just last week, Trump stated a few times that he wants lower rates. Even back in his previous term, wanted negative rates, believe it or not. Great way to manage debts and refinance when you have to. But he most recently demanded lower interest rates, that Powell has to get to work. So the Federal Reserve met. FOMC was yesterday. We're taping on the Thursday. Yesterday, Wednesday, they kept rates stand pat. They didn't move on the rates. They kept it as expected. Where are they at?
What's like the over under that Trump decides in public to say, well, you know, listen, if Jerome Powell doesn't want to drop rates, I'll just roll it into the Treasury, and we'll just encourage all of our senators to not defund the Fed, but
Squeeze it out.
Squeeze it out, right?
That's what
it's
happened.
only there because Congress approved it to be a function in the United States, so it could be easily undone. And could he table that?
Yeah.
As you know, as sort of his negotiating tactic, the way he's used tariffs. He could say, all right, Jerome, I'll tell you what, why don't I threaten every single one of your jobs?
Yeah.
I'm going to roll it into the Treasury. We're going to get rid of you guys. And I'm going to tell all my congressmen to table bills tomorrow.
I think that will be last. I think that's what's going to happen last. I think the Federal Reserve has already has its days numbered.
Unwitting participant? You
Yes.
think they will be an unwitting participant?
But I think it'd be too easy to just go right after the rate cuts, and that will be the solution. There were many other problems in Trump's response to Jerome Powell not cutting interest rates yesterday. Trump responded to Powell's policy decision yesterday. He wrote, because Jay Powell and the Fed failed to stop the problem they created with inflation. So he said, you created the inflation.
Well, hold on. I don't agree with that because you know that a lot of it was the debts that were created
Absolutely.
and just giving money away to different countries and stuff. So
Fiscal as well.
They
fiscal.
played a part, but it wasn't just them.
He says, I will do it by unleashing American energy production, slashing regulations, rebalancing international trade, reigniting American manufacturing, but I will do much more than stopping inflation. I will make our country financially and otherwise powerful again. The Fed has done a terrible job on banking regulation. Treasury is going to lead the effort to cut unnecessary regulation and will unleash lending for all American people and businesses. If the Fed has spent less time on DEI, gender ideology, green energy, and fake climate change, inflation would never have been a problem. Instead, we suffered from the worst inflation in the history of our country, he concluded. So to me, it was, let's look at these things first. Let's fix the manufacturing problem. Let's rebalance international trade. Maybe, worry about the foreign exchange conversion.
It's a circling to the target, right?
100%.
I've got all these other low-hanging fruit I need to take care of, and then we're going to start to attack the financial system, and then we can talk about our criticisms of the Federal Reserve and these issues that have plagued people for decades.
And if you look here,
who was the biggest benefactor of getting rid of the gold standard?
The private banks.
The Federal Reserve.
Yeah, the private bankers that run the Federal Reserve. This is private. This has nothing to do with the people, has nothing to do with the U.S. Treasury and the country at all.
And did you get as rich as the head bankers that got the first take at the trough? Absolutely not.
No,
you
not
did
you.
not.
Not
Instead, you got taxes raised. You got 2-income families, right? You got less trips. You got all of these things didn't work out for you. So at the end of the day, you need to unwind this and go back. And if you're smart enough to have understood all this and owned gold for the last 30 years, you've done fantastic because you've hedged all of it. Certainly, Ron Paul has known about that and discussed it at every interview he does.
Very true.
And one of his interviews, he said, "Yeah, you can tack on another 0 to 2,500 by the time this ends." Jerry, we got 30 seconds.
Yeah, as you mentioned, entire civilizations from their countries and their banks have come and gone. But gold, being money God assigned to us, is eternal, reliable, and consistent. While the bank deposit, as we go back, does not protect against the loss of this purchasing power due to inflation, gold has done this, silver has done this for thousands and thousands of years. While most save in term deposits, the astute savers will save in gold and silver, and said that is the solution. Save in gold and silver, and said convert out of this fiat system into tangible monetary hard assets.
That's it. That's the show. The number 18778 silver. The website guildhallwealth.com. If you've missed a show, please check us out on Rumble and YouTube, Spotify, and please follow us on X. All of this stuff that we're talking about, you're going to see it there first. So definitely follow us. Thank you so much for joining us this week, and we can't wait to speak to you next week here on The Real Money Show on 640 Toronto.